Hello and Assalamualaikum to our panel. I'm Liana Taufik and joining me today,
I'm Liana Zaman.
I am Tuan Muhammad Izzat.
I'm Nur Hidayah.
I'm Fatin Nadia.
we are from
BA
BA 1145E. We are going to present you Company Analysis Dufu Technology Corp Berhad.
We will begin the economy analysis with the two world's largest national economy and the most powerful dominance of the market, United States of America and People's Republic of China. In USA, we can see that from the year of 2017 until 2019, and the overall economy indicators shows above are decreased. Notably, the gross domestic product (GDP) annual growth of USA is decreased to 2.334 from the previous 2 years. On the other hand, in 2019, also the interest rate has declined to 1.75% and the inflation rate has dropped to 1.81%. For China, the highest GDP annual growth can be seen in 2017 with 6.9%. as the increasing of national output and also national income. However, the growth is declining as the pandemic of COVID-19 occurred in early December 2019. Hence, the inflation rate in China continuing increased from 2017 to 2019, which is from 1.59% to 2.90%. Then, the interest rate was declined to 4.15% in 2019 from the previous year. Now, let's move to Malaysia's economy. The Malaysia's economy growth in 2017 has risen by 5.74% from the previous year and makes the GDP in 2017 was 1,324.64 billion ringgit Malaysia, and it was the lowest rate among 3 years ahead. Meanwhile, in the following year, in 2018, the Malaysia's economic growth is increasing by 4.74%. As we know, the economic situation in 2019 can be considered stable as the economic growth is maintained at 4.6%. The GDP rate in 2019 was projected 1,514.6 billion ringgit Malaysia. This could be linked to the inflation rate in 2019 that has decreased to 0.66%, making it the average inflation rate of the year. In economy, a lower inflation rate is beneficial as it shows that the cost of essential goods remains stable and affordable for the consumer. Now, let's move on to the inflation and interest rate. The inflation rate in 2019 was the lowest compared to the last 3 years as it has been recorded. In October 2020, the inflation rate was indicated as negative 1.4%, and this can be said as a general price decrease, but it is not sustainable. This is because of the sharp drop in the price of certain goods or services, such as the fall of oil prices that happened in the third quarter of 2020. The latest interest rate in 2020 was recorded at 1.75%, which is the lowest in the record, and declined 1.25% from 2019. This is occurred because of the government incentives to help the people as the monthly cost of mortgage repayment would decrease and would leave more surplus for the families in contributing to the increase of the economy. Other than that, a lower interest rate gives saving a lower return that would help and allow the consumers to spend their money instead of holding onto income.
Now, move to industry analysis. Industry we choose is industry product and services, and the subsector is industrial materials, component and equipment. Industrial materials, component and equipment is one of the highest contribution in accelerating gross domestic product (GDP). It becomes crucial in the industry as Malaysia is ready to move along with the global trend of Industry 4.0 and the Industrial Internet of Things, and strive to become a developing country by the end of 2020. As for performance, in the Outlook Budget 2021, the government has targeted the growth in the manufacturing sector to strengthen foreign investor interest and keep the momentum as a developing country despite the downswing of economy. This sector is expected to keep the sustainability for long-term performance and accelerate the process of growth as the demand in the manufacturing sector increases gradually. Based on Third Industrial Master Plan IMP3 Industry 4.0 is a key to developing the machinery and equipment industry to survive in the global environment and accelerate Malaysia's high technology transition. Based on Malaysia's Budget 2021, the government intends to allocate 1 billion strategic funds as a special incentive package to stimulate the investment in technology, including research and development (R&D) for a few industries contain machinery and equipment. China has positively approved its investment in manufacturing projects in primary industry related to machinery and equipment, electronic and electrical products, direct metal products, non-metallic mineral products, and wood products. Move to the market share. With the 3,978 billion income conquering 20.89% of overall market share, we can see VS the industry was a market leader in the field of industrial materials, component and equipment company sector. This is because VS Industry established 5 years earlier by means they have more experience in this field. Dufu market share consists 4% overall market share with 249.12 million income. Nevertheless, its income lower than VS. The net profit for the third quarter ended September 30, 2020 increased from 9.9 million by 29.9% quarter on quarter to 12.86 million, primarily due to higher HDD sales volume. As for Cbip, the revenue is higher because the company is active in the distribution of management services. Now, let's move to the company analysis. Dufu Technology Corp Berhad is known as investment company that involved in manufactures and supplying for industrial products in Malaysia, Thailand, China, Singapore and globally. The company is located at Kawasan Perindustrian Bayan Lepas, Pulau Pinang. Dufu manufacture complex component and also equipment for industries such as hard disk drive (HDD), medical components for orthopedics, computer peripherals and other components. Dufu third quarter 2020 net profit rises 30% to 13 million ringgit on higher HDD sales volume. With a market share of 4%, Dufu rivals include companies such as Cbip Industrial Products and the leading market VS Industry Berhad.
In order to get a true picture of financial analysis, we conducted their horizontal and vertical analysis of Dufu and Cbip. We chose the time span from 2018 to third quarter of 2020. With the current ratio, we could see that compared to the previous year of 2020, the ratio has shown a positive momentum from 3.99 times in 2018 to 4.99 times in current year. This has proven that Dufu can pay the short-term debt. Same goes as quick ratio, as the momentum has shown an increase from 2.6 times in 2018 to 3.03 times in 2019, and the highest in 2020 with 3.53 times. This has proven that the company is able to pay its current liability without relying on the illiquid of current asset and improve each year. In 2018 to 2020, for net working capital, it has shown an increase each year, started from 155 ringgit 51 cent to 166 ringgit and 67 cent. The influence of positive sales revenue and the efficiency of inventory, which helped the company paying its short-term liability. Showing in the data collected, From 2018 to 2020, the percentage of debt ratio has decreased from 21.15% to 20.21% in 2019, and its lowest in 2020 with 19.95%. Minimizing the business debt can be the cost of the reduction of percentage and lowering the risk. Debt equity ratio has shown an increase from 3.75% in 2018 to 5.06% in 2019. However, the percentage declined to 4.17% in 2020. This is a good sign as the market risk for the company is less for the investor. Lastly, the time interest earned ratio for Dufu decreased rapidly from 155.40 times in 2018 to 57.27 times in 2019. However, in 2020, it increased to 113.95 times, which indicate that the company able to cover every 1 ringgit of interest expenses.
The first one is account receivable turnover. Comparing from 2018 to 2020, the times has decreased rapidly from 4.15 times to 0.87 times. This has proven that Dufu is not able to reduce the amount of account receivable faster for current year compared to the year of 2018. The second one is inventory turnover. From 2018 to 2019, the times has increased slightly from 1.36 times to 1.38 times. However, it has declined rapidly to 0.82 times in 2020. This has shown that Dufu is not efficient enough in managing their inventories.
The third one is total asset turnover. From 2018 to 2020, it has shown that the time decreased drastically to 0.26 times with the total asset turnover below 2 ringgit. This has proven that the company is unable to use their asset efficiently to generate sales. The fourth one is fixed asset turnover. Showing from the data, it has a declining from 5.33 times in 2018 to 1.07 times in 2020. This proving that Dufu is not efficient and underperformance to generate more revenue. The last one is average collection period. To compare from 2018 to 2019, the days have increased from 87 days to 413 days. Dufu takes longer days to collect its receivable as the idle credit term is less than 30 days, while Dufu has exceeded to 413 days. That has led Dufu to acquire an aggressive procedure of collection. Started with profit margin, from 2018 to 2020, the percentage has decreased from 21.47% to 16.93%. This has shown that the company's strategies of price is ineffective. Next, the gross profit margin. The percentage has shown a rapid declining from 9.82% in 2018 to 4.42% in 2020. This has proven that Dufu profit is inefficient as the performance of the company worsened since pandemic COVID-19. As for operation profit margin, it also has shown a decreased percentage, which the value in 2018 is higher than 2020, with 26.95% than 22.16% with the data. It has proven that Dufu's operating expenses is higher than previous years. The next one is return on asset. To be compared from 2018 to 2020, the percentage has dropped drastically from 23.55% to 4.4%. This can be caused by the asset is overinvested, which have failed for the revenue growth. Lastly is return on equity. The percentage has declined rapidly from 2018 with 9.86% to 5.35% in 2020. This has shown that the company is not able to generate the profit on investment from the company's equity. Start from earning price per share, it has shown a decreasing value from 0.103 cents in 2018 to 0.10 in 2020. This has outgrown the company's profit. As for price earning, the times increased from 9.51 times in 2018 to 32.70 times in 2020. This indicates that Dufu stock's expectations on earning is increased each year. Dividend per share has increased from 0.01 cents in 2018 to consistent for 2 years with 0.04 cents. This has proven that Dufu can maintain the company's growth and profitability in the future. Lastly is dividend payout ratio. The percentage has rapidly increased from 10% in 2018 to 44% in 2019. However, in 2020, the percentage has dropped slightly to 40%. So this has proven that the company is well known in the industry as they are reinvest half of its earning for the growth.
So we go to the vertical analysis. The first one is liquidity ratio. In comparing of Dufu and Cbip for current ratio, Dufu time is higher than Cbip by 4.99 times compared to 2.64 times. This has shown that Dufu is better than Cbip as they are more able to pay its short-term debt. By means, Dufu is able to cover for every RM1 of their current liability with RM 4.99. Next, quick ratio for Dufu is much better with 3.53 times compared to Cbip with 2.28 times. This can be concluded as Dufu able to pay its current liabilities without relying on illiquid of current asset compared to Cbip. Lastly is net working capital. Even though Cbip is higher than Dufu with 356.12 million compared to 166.67 million ringgit in terms of net working capital to current liability, Dufu is leading with 3.99 times compared to Cbip with 1.6 times. Hence, Dufu performance is better than Cbip. So, we go to the leverage ratio. For debt ratio, we can see that Cbip is higher than Dufu by 36.18% compared to 70.95%, which means Dufu has low debt. This has proven that Dufu has a better performance as they have a low risk with more assets than debt. As for long-term debt equity ratio, Dufu has a better performance as they have a lower percentage with 4.17% compared to Cbip with 16.55%. By means, the creditors may provide 0.04 ringgit for every 1 ringgit provided by Dufu. For efficiency ratio, account receivable turnover ratio is slightly different for both companies. Dufu times has taken the lead by 0.87 times compared to Cbip with 0.74. By means, Dufu is more effective in collecting their receivable. For inventory turnover ratio, Cbip time is higher than Dufu by 1.6 1.66 times compared to 0.82 times. This indicates that CBIP is better in managing their inventory compared to Dufu. To compare Dufu and CBIP for fixed asset turnover, Dufu is achieving a better performance on making profit, which is 1.07 times higher than CBIP, which is only 0.36 times. Lastly, as we compare with average collection period, Dufu is lower than CBIP by 413 days compared to 486 days. This means that Dufu is better as they are able to have a good collection procedure as they receive the payment faster. Showing in the slide the data of profitability ratio. Started with net profit margin, Dufu's percentage is higher than CBIP by 16.93% compared to 6.85%, which means the company is able to gain profit for every 1 ringgit of sales. Move to the next. For gross profit margin, we can see that Dufu is leading with 34.42% compared to CBIP with 15.77%. This has shown that Dufu's cost of goods are lower than CBIP. For market ratio, start with the earning price per share. The value for both companies is slightly different as Dufu is 0.10 cent and for CBIP is 0.09 cent. However, the price earning for Dufu is much higher than CBIP by 32.70 times compared to 12.11 times. This has shown that Dufu profitability is better than CBIP. For regression, as shown in the data, both companies did not have a strong relationship with the KLCI market return. However, to highlight in the equation for Dufu, for every 1% of KLCI market return, Dufu's return will increase by 2.0027%. For CBIP, in every 1% of KLCI market return, the company's return will decrease by 0.9016%.
I will present you about technical analysis. Firstly, I want to compare Dufu and Cbip charts as there is a difference in price movement. We can see that Dufu has shown a strong bullish and a major uptrend, which can be proven that the price was making higher high in chart different with Cbip. The stock is more to sideways and don't have a main trend. Okay, let's see to the KLCI index. There is not too much difference between price movement, Dufu and KLCI index as both make a new high in 2020. Even the movement is of Dufu almost the same with the KLCI index. Besides, if the stock has a major movement which is an uptrend, it's a very good reason to invest. Next, I will tell you about technical analysis by looking at the trend analysis and some indicator. By looking to the Dufu trend, as I say, it was a bullish and we can see Dufu stocks have a strong support price. This is because there is no lower low price. Other than that, we can see at the support trend line, it's expected that the price will decrease. However, the price recently break the resistance trend line, which intrigued people in interest. Next is simple moving average indicator. Simple moving average or SMA is used to identify the trend with support level. Using SMA 20 standard, at the current price, there is a buy signal when the price moves above the SMA and ready to buy. For the next indicator, I will use moving average, convergence, and divergence, or we can call MACD. This indicator shows a buy signal for Dufu. This is because when the current price shows that the MACD line has made a crossover and comes with MACD histogram rebounded from below the zero. So from the technical analysis, we have 3 reasons to buy the stock. That's all from me. Thank you.